now, Matt.
Thank you very much for that, Lizzie. Now, the last time our next guest was on, he correctly called the global crisis.
I'll tell you what I fear most, and I think we're heading in towards a situation. The global climate now is ripe for a situation where there's a crisis.
Joining us now here in person is Joe Saluzzi, co-head of equity trading at Themis Trading. Joe, welcome to the show. Thanks for joining us. Let me talk to you before we get to what Carol and I last had you on Thursday. I want to talk to you about.
We're giving you your props because for a long time, I remember last summer when you were talking, everything down and everything was going up, we gave you a really hard time.
Wow, I can't believe I'm at Bloomberg. Is this Bloomberg?
Enjoy it while it lasts.
I want to talk to you about what's going on over in Europe because there was so much optimism yesterday, not enough to bring us back to Wednesday's levels, but big gains in the market, and then that seems to be faded a little bit today as people go through this package that the EU has put together, that the ECB and the IMF put together. I mean, is it all just phony baloney here? Is there any real cash coming through? I mean, what do you think?
It's taking one credit card to pay off another credit card. It's increasing debt, and that's the price. Look at the price of gold. Gold's telling you everything. Forget the stock market. Forget even the volatility index at this point. Gold is telling you if they're going to print money like that, inflation's on its way. You got issues.
Matt, you mentioned yesterday when talking about this kind of a Ponzi scheme, and I've seen some stories on the terminal also kind of saying, what does this do to somebody like France and Germany? Does it screw up their AAA rating by kind of guaranteeing money to these other troubled nations? I mean, is it kind of a Ponzi scheme in your view?
I mean, they're really no different than the United States. We've done it already. They learn from the best. The biggest Ponzi scheme around, right? Ben Bernanke and gang are doing it here. So they're doing the same thing we have. The debt can't keep increasing. You have to stop. You got to eventually either stop building the debt and try to build some equity. Just like, Nassim Taleb was on with Tom Keene this morning, talking about just like a homeowner or a share your own wealth in your own house. That's what you do. You build equity. You don't build debt. Doesn't make any sense.
Unless you're a central bank, one of the central banks in a race to inflate, a race to devalue your currency. Is that what you see happening over with the ECB? And do you think they get the euro down to parity?
I guess they want to. It's on its way, right? The market seems to take it that way. I don't know, to be honest with you. I don't know what they're up to, but the market loves, bailouts. We're no longer, Barry Riddle's had a book, Bailout Nation. Now we're Bailout World, right? Everybody wants a bailout, and this is going to keep on going.
What do you see the market trading on right now?
Right now, the equity markets at least are still fearful, and there's still sorts of skittishness going on out there. Amazing how you're up 50 points on a Monday morning and it stays flat the rest of the day. Did anybody catch that yesterday? We walked in, futures were gapped up 50, and we didn't do anything all day. So if you weren't long by the time, on Friday night, you didn't get long unless you were in the futures pits.
Right.
So I don't buy it. I don't think that's going to help our U.S. equity market. That's a whole different story. But, to me, it's just another, it's going to crumble. It's just a matter of when.
All right, Joe, hey, stay with us. We're going to keep you on. We'll take a quick commercial break. When we come back, we'll talk to Joe about what happened on Thursday.
Right.
Could it have been stopped? Will it be stopped next time? Stay with us here on Bloomberg. We're back in just 2 minutes with more. SAP.
All right, so we've got a great lineup, but we've also got a great guest right on set. We want to get back to Joe Saluzzi, co-head of equity trading at Themis Trading. So, Joe, so much was written about what happened last week over the weekend. Are people missing it? It's kind of it's shocking to me in the most developed market in the world that we still don't really have concrete answers.
No one knows why still.
I'll tell you why. There is no reason. They're looking for something that doesn't exist. I can save a lot of taxpayer dollars right now and tell them to stop because there is no particular cause. The problem is the market structure. And we've been complaining about this for years, how it's set up. After Reg NMS, which was enacted fully in 2007, you've got a fragmented system of ECNs and exchanges all kind of competing for order flow.
Right.
What happened is there are no more obligated liquidity providers, such as a specialist or a real over-the-counter market maker. You now have automated market makers who have no requires to stand there.
Why hasn't this situation happened more often?
Well, I would argue.
Okay,
I'll tell you why.
We went through the crisis.
Yeah, I would argue that it did.
About this?
I would argue that in March of 2009, as well as parts of 2008, when we had those days when we were down, remember 800-900 points a day, I would argue that the same thing happened then, and everybody said, oh, the equity markets worked fine. Did they really? Did they really work fine when you would drop in 900 points? Now, there was a cause, obviously, Lehman and so on. But it was the same thing when the bids disappear. And I talked about this. The vacuum is created. The sellers come in. They start looking for bids that are non-existent. And they hit the first marketable bid, which happens to be $42, $10, whatever it is. So the problem is the exchanges. And this is the biggest joke that's out there. We're talking about circuit breakers. Yeah, we agree that that's a good thing. You should have had them in place 3 years ago. But now they're trying to make you look over here and say, look at the circuit breakers. This is the real problem, guys. We need circuit breakers. Well, great, address that. But the real problem
you have
is that
circuit breakers in place that wouldn't have really helped you much after 2:30 p.m., which is exactly when this happened.
Well,
right?
you would have had to wait for 20%. But the New York Stock Exchange did the right thing by putting in their LRPs, and they tried to slow it down. And that's part of the New York Stock Exchange business. The other part is when they're opening up a 400,000 square foot data center in Mahwah, New Jersey, to cater to the high frequency traders. Okay, but here's the thing, real quick. The exchanges are at the heart of the problem. They are the problem because they're the ones supplying the high frequency traders with the data feeds, with the colo, with the rebates, with all the things that they get to take advantage of regular Joe investor, yet have no obligation to support the market.
Wasn't this just, and I'm not refuting what you're saying, but wasn't this just a panic, though, Joe? I mean, it happened to coincide perfectly with the escalation of violence in Greece. We all by now have heard Ben Lichtenstein trading S&P in Chicago on zero hedge or wherever you want to pick it up. You can tell there are no bidders in the market. You keep coming down. As you say there's a vacuum, but it seems like a basic panic.
No, the reason why I don't think it was a panic was you didn't have a monster volume spike. We had a monster volume day going anyway. We were tracking 13, 14 billion shares that day. You had a light volume, massive sell-off in 15 minutes. Now, a real volume sell-off, had you had a real market structure, you would have had 10 billion shares traded that time if there was a real event. Everybody realized the volume wasn't there. The buy orders came back in and it shot it right back up. But that event right there destroyed investor confidence in the United States stock market, and now we got to work to build it back up.
Got 30 seconds here for you. So, all right, you got these hearings, people, lawmakers looking into what's going on. I mean, what's crucial that needs to happen so that doesn't happen again?
We just put out a new paper today. I'm going to plug it because it's called Data Theft on Wall Street. It's on our website. The exchanges are giving away information to these guys for investors, like long-term guys who think they're putting in hidden order flow into these machines. It's not hidden. They're telling everybody what's going on. They need to talk and look at what's going on in these data feeds, what's going on in the colo, this whole intertwined mess. Fragmentation and transparency, as Senator Kaufman said, we don't have it right now. Okay, we're looking for it.
That's not a very good plug of your website.
Plug the website.
You didn't tell us the name of the website.
Okay, you know where it is.
ThemisTrading.com. You can pick it up probably on any of the doomsayer sites, too. I plug Zero Hedge already.
Thank you,
Zero
Mr.
Hedge has been doing a
Saluzzi.
great job, by the way. Everybody should be reading that site.
It's a fantastic read. All right, we're going to take a quick break. Joe, thanks so much for joining us. Quick break here on Bloomberg. We are back in 2 minutes. Going to go down to the New York Stock Exchange.
Talk to a trader. Stick around. We're back in 2.